All right, Matty, welcome back to the Ask Matty Show. Matty, how are you doing?
Hey, I'm doing great. Like I tell you guys all the time, this is one of my favorite shows to film during the week outside of course, the content that we film at CryptoCharge, doing our CryptoCharge live shows with more comprehensive updates. But I love hearing about what you guys are interested in. It kind of helps me craft some of my own content. And sometimes you'll research into things that I wasn't even anticipating to research myself. So excited to be here. Excited to see what you guys are interested about this week.
Team, welcome to the show. It's going to be a great show. You're not going to miss it. Stay till the end. We have a lot of good topics today. We're going to be talking about XRP. We're going to be talking about Bitcoin and HBAR, crypto profits, maybe even a little bit into the memes here, because some of you may think when we trash memes, we're only trashing the newer memes, and we're not trashing like Doge and Shiba. So we're going to get into all of that. You're going to want to stick around. But before we get into the content here, become a CryptoCharge member. CryptoCharge.com is an educational platform that we are from, and so that is where you can find us at. The tools, the daily shows, our Discord, which is our community where you can get tapped in with smart people that are in crypto. Don't do this alone, team. I feel like I harp on this on every show. Do not go through this bull run alone. Like, you will get lost in the sauce. You'll be looking at Twitter as when to sell. You'll get caught up in your emotions. I can't tell you guys how many people I talk to nowadays, and I ask them, hey, what's your take profit plan on your crypto? And it's like, they usually be like, and they
deer in headlights.
It's like, is it when you feel right? It's like,
Right.
I know, Matty, me and you talk about this a lot outside of the shows. We just talk about taking profits and why it's just stupid to go based off feeling. And you can't go based off feeling. You got to go in with strategy. And that's what we provide at CryptoCharge.com. 30-day free. Click the pinned link in the comment section down below. Check us out there. But now we're going to get into the content. Matty, are you ready?
Let's do this, baby.
Will Schuster 14 says, a question I have for the next show is, when do you believe the bull cycle top will occur?
What's up, Schuster? I think I remember seeing you on Twitter recently. So if you guys are not in our Discord community, make sure you're in there, because I know you guys got great questions and would like to answer them more often for you guys. When will the bull top occur, right? That's the question everybody wants to know. If I could tell you the exact date that the bull top would occur, I would be investing completely differently, right? I would not be putting a dime into the market until I knew that it was going to bottom. I would not be taking a dime out until I knew the market topped. We can't go off of these timelines, right? We also are waiting on a lot of other macro factors right now that will kind of give us an indication of when the markets are going to be able to run a little bit more freely. One of the big, factors right now is the Federal Reserve has not started quantitative easing quite yet. So rates are still high. We haven't raised them again, but we have paused. The number of cuts anticipated have gone from 3 to 2, and the anticipation of when those cuts are going to happen are not until later this year, when they were projected earlier to happen in the summer of this year, right? So even when we look at some of these macro factors, we can say, well, the Fed's going to cut by summer, so it should go on for 12 to 18 months, and we should be done by mid-2025, right? But we can see that can very easily be, tipped over with just hotter than expected CPI data like we saw, or, you see 300 drones come from Iran, and, the markets tank a little bit harder. So timing the market tops and timing the market bottoms is next to impossible. Now, what can we look at this year, right? We have the election year like we've talked about previously. We know that there is a higher statistical probability of a recession being announced next year instead of this year. So, do we go through this year with maybe some, a little bit of rough waters through the summer, and then maybe see a nice little rally into the end of the year and then see a finisher into 2025? Yeah, sure, entirely possible. But I couldn't tell you, right? There's absolutely no way to tell you. You can look at periods of previous economic expansion and say we're going to see something similar to this, 18 to 24 months. We've also seen economic expansion last much longer than that, much shorter than that. There's really no way to say when a topping will occur. So anyone tells you need to have your money out by October of this date, they're just speculating off of previous cycles, right? History often rhymes, but it doesn't necessarily repeat itself verbatim. So I try not to time the markets too much. I have TP plans, right? TP1, TP2, TP3. We always go aggressive on TP1 because we don't know what that top's going to look like, and we don't know when that top's going to happen. So we always want to be price oriented and not time oriented with our investing. So I'm not going to give you an answer because I don't have one.
Good. And a perfect example of that is the Bitcoin halving, Matty.
Right.
You've harped on this so much, and we saw Bitcoin breach a new all-time high before the Bitcoin halving, just proving
Yes.
that the Bitcoin halving was not the catalyst. So when we
Exactly.
look at, You know, the people that we used to bash back in the day, where it was like these people that would look at one indicator and be like, oh, this is this. And it's like, that's not true. The Bitcoin
Right.
halving isn't that. You got to take a more grandiose approach. You got to look at the economy in order to paint a better picture. And I think we do a pretty good job at that. When I hear you and Dan talk about it, it's like, oh, yeah, that's I mean, that's the approach you want. You don't want to go on YouTube and listen to these people
Right.
tell you about this one thing that's going to make crypto happen and go to this price by this date. That's what you don't want to hear. If you do hear that, run far away. Scully Volley says, with banks designing their own blockchains, what's the point of XRP?
So good question. And these are the questions you guys should be asking yourselves. I mean that sincerely, right? You're asking yourself, why should I invest in this if banks are designing their own protocols, their own ecosystems? Let's think about stablecoins for a moment though. Tether, right? Tether and USDC used to exclusively run on the Ethereum ecosystem, right? So why would anyone else develop anything else when we already have stablecoin on the Ethereum ecosystem? Fast forward now, I go on Coinbase and what do I have when I want to send some USDC somewhere else? I have 10 different networks to send that over. So when you look at assets and ecosystems, what we're going to be seeing more and more of in the future is interoperability. Right now, even there's many, many mediums to store and send money, right? Yes, it all revolves around USD, but there's many rails, there's many networks, there's many messaging systems that helps us, kind of make everything connected. When I want to send money from the United States over to Paraguay, it's not a one-step process, right? There's multiple intermediaries along the way that help facilitate that process. Everyone's taking a little piece of the pie as it goes, but it still requires some level of interoperability. Now, all we're doing is taking the existing messaging systems, the existing standards, and then making them more efficient and more interoperable with crypto. So, when you look at the asset XRP, I think that it does debunk what a lot of people talk about. If everything's going to run over XRP, everything will run over Bitcoin. It is preposterous. It sincerely is. But when I look at the value of taking just a portion of GDP, taking a portion of intellectual property, taking a portion of some of these things, saying, hey, what if just this portion ran over it? We could still see an enormous price increase. And you could still have existing bank systems that allow those assets to run over those rails. If XRP is being transacted, why would banks want to not include XRP over their rails, even if they have their own ecosystem? Yeah, maybe you're going to pay fees to send over Chase Coin network or whatever it is, but it doesn't mean that we're still not going to be able to send those valuable assets that are efficient at doing what they do. So maybe for inter-treasury settlement, sure, Chase Bank could use Chase Network. But when you already have some of these fintech products out there that can be a plug and play solution, but maybe it's customer facing where, it looks like it's branded for Chase, XRP might be working in the background with whatever Chase wants to have for their inter-treasury settlement and kind of see a hybrid model there. So I definitely see a future where interoperability and hybrid models are going to be a big part of adoption there. So again, I'm not this believer of everybody's going to transact in XRP. I think that's absolutely stupid. I don't think we would ever trade Microsoft shares back and forth with each other. Hey, you owe me 0.02 Microsoft for that coffee, right? It's just ridiculous. So I think that when we look at them as ecosystems and rails and the interoperability between them, that it becomes a little bit more of a clear picture. But again, great question. These are the questions you should be asking yourself before you get invested in anything.
Matty, we've been high-key shitting on every meme coin project we can get our hands on and every meme coin that's been brought up to our attention. And so Trending Value asks here, all meme coins like Doge and Shiba or things like Jerkmate and Come Rocket? Serious question.
So again, with meme coins, there isn't like this intrinsic value there, right? You can always try to join the trend that's intact. You can always try to identify a trend that you want to be a part of. But if there isn't that long-term value, there isn't building, there isn't demand on that network, what are you doing? You are day trading essentially. And if you are going to be day trading, I sure hope that you know how to use stop losses, take profits, and entries properly. There's going to be a big flushing of meme coins like there was last cycle. There's lots of meme coins from last cycle that are dead that you guys don't even know about, right? I can't tell you how many people told me I had to buy ZooCoin because it was doing XYZ returns. First of all, most of those people weren't able to exit at the price they wanted to exit at, and ZooCoin has filed for bankruptcy and it is worth absolutely nothing now. Everybody will tout the 2 or 3 coins that do really, really well, right? Dog with hat, Doge, Shiba, but nobody will ever post on Instagram about how they got rugged, right? Everyone's too embarrassed to talk about how much money they lost in a rug or how they bought the top and, now they're down minus 70, minus 80%. So if you choose to enjoy the meme coin trend, right, make sure that you're not being overly greedy with it. Take your 50% gain, take your 2x gain, take your 3x gain. Don't be that greedy goblin that says, I need 1,000x or nothing. You guys have to approach it very, very carefully because, again, what's going to be at the top of your newsfeed is everybody making all this money with meme coins. You're not going to see at the top of your newsfeed everybody who got absolutely wrecked with the rug pulls. There has been so many examples of rug pulls, people losing millions and millions of dollars in these meme coins. So, with any crypto project, right, it's always a risk. There's already enough risk in the space, in my opinion, and we don't need to introduce more risk with the meme coins. There's so much volatility. With real altcoins with regular utility, minus 50, minus 60% based on this news right now. And some of these altcoins offering 10, 20, 30x returns. So I just don't understand why we have this need to chase this enormous, hypothetical reward that is very, very unlikely, right? It's like we talked about previously with lottery tickets. You have a better chance statistically of getting struck by lightning on your way to buy the lottery ticket and then getting bitten and mauled by a dog on the way home than winning the grand prize in the lottery. Yet Americans spend on average like $1,200 a year on the lottery, right? So I understand that there's a psychology of like, I will put some money up to be risk, but why not put that same $1,200 into an asset that is good quality and take that 5, 10, 20x reward, right? And know that you have a lot more confidence in that. So again, I'm not anti-trading. I'm not anti-meme. I'm just pro being diligent with your dollars. So I think that's all it really comes down to for me.
Benny Things One says, what is the best way to spend your crypto profits this year?
So if we have them this year, I think we talked a little bit about this on a previous show, kind of where to allocate. I think really the big thing that most people get distracted with is, you come into this big sum of money, because you've been accumulating, you have whatever, let's say 50K in the market, and you put in the 50K into the market over the last 3 years or so. And suddenly that 50K is worth $2 or $3 million, right? That is an enormous pickup in total net worth. And a lot of people will be, incentivized to go and start spending and start living a very different way than they were living previously. But I think the biggest thing to consider is, of course, have your big FU purchase, right? Go ahead and identify what that is, decide how much of, your portfolio you want to spend on XYZ luxury thing. But really the majority of your portfolio should go back into investing, in my opinion. And maybe you diversify. Maybe that's some real estate. Maybe you diversify a little bit into the stock market and looking at some other tech stocks that are a little bit more volatile that can provide a better return. Maybe you're looking at starting another business to create cash flow for yourself. But I would say that probably 85% of everything that you make in this market should at some point go back into either other cash flowing assets or back into the market, with only maybe 15% of that being spent on, luxury goods or experiences or whatever you want. Too many people will make great money and then lose it all. You can go on Twitter and you can see some of these guys that made huge money in the 2018 cycle, and it's all gone. It's all gone because of the aggressive change in lifestyle. So it really just comes down to not over leveraging yourself, right? Like that car that costs, 500K versus 100K, are you really going to be 5 times happier? Or is that extra 400K better served in another investment vehicle? So, it really is up to you. I can't tell you what to do with your money, but I will be reinvesting almost the entire, gains from this coming cycle back into the market myself.
Johnny Will Made It 99 says, if I sold all my Bitcoin for HBAR, would I make more money?
From a risk reward standpoint, yeah. I mean, you look at Bitcoin right now, even in the 60s, Bitcoin at 120K, that's 2x. I mean, what does HBAR have to do from here to get a 2x, right? We're talking about a very, very dismal gain and not even touching anywhere near the previous all-time high. So always consider market cap when you guys are looking at price targets, right? How much money needs to be in this particular asset for it to be worth this much? How much does the total market cap, total market cap have to be in order for this much money to flow in? I think a lot of people will start to look every cycle as we start to get bullish and the targets get a little higher, right? That 250K Bitcoin, which sounded like a reasonable top in the bear market as we breach 100K, starts to sound a little light, right? Everyone starts to say 500 sounds a little more reasonable. 750 sounds pretty reasonable because we have BlackRock now and we have Fidelity and we have, all these ETFs now. So why is 750K in the next 2 years not reasonable? And I just think that people need to look at the previous periods of growth and understand that there is diminishing returns, even though market cap is growing. And some of that market share will continue to be spread a little bit more evenly. We've had all this discussion about Bitcoin dominance and, people are looking at just a handful of cycles with Bitcoin dominance to go, well, this is how it's always going to be. We're always going to see huge resurgences in Bitcoin dominance. I'm personally not of that belief. In fact, when you look at Bitcoin dominance as a macro chart, we're making lower lows and lower highs. So why wouldn't the theory be over time as more reputable assets come online? If you think that this is the end all be all for DLT and blockchain, you're sorely mistaken. 10 years from now, this space will look absolutely different than it is now. We're going to have a lot of coins flushed out. We're going to have some winners that stay, and we're going to have new tech that is outpacing the old tech. So why would we assume that this model that was built before 4K video was even out is the end all be all model for DLT as a whole? I believe that Bitcoin dominance over time continues to drop. Now, that doesn't mean that Bitcoin doesn't continue to make new all-time highs. The returns will just become more like Dow returns or S&P 500 returns, which are still better than no returns. But again, I'm here to capitalize on the volatility. Have a much bigger risk appetite than someone who's 70 years old and has 5 kids. So I think that it really comes down to, what you're potentially looking for with your goals, what your risk appetite is, what your existing holdings look like, what they look like outside of crypto. But yes, from a risk to reward standpoint, when you look at even HBAR reaching, 60% of its previous all-time high, you will outpace Bitcoin at where Bitcoin would be at 120K. So, it really just kind of depends on what your goals are.
Matty, we have enough time here. Would you mind pulling up maybe a Bitcoin and HBAR comparison here and showing us what this looks like on the chart so we can see it visually?
Yeah, so let's build that out really quick here. So we'll do a little side-by-side panel, and I'm going to dress up the chart a little bit here. We're probably going to come out to a 3-day chart. We may have to adjust that a little bit. We'll throw HBAR on the other side. Collapse that window in here. And we'll switch this to Bitcoin really quick.
Yeah, take your time, Matty. We got enough time here. We just been running right now.
All right. So what I would consider here with Bitcoin, right, is what we want to do is grab the previous high, previous low. And that's where we get a lot of these targets. We use these fibs to help us identify targets. So we're here, just barely breached over that previous all-time high, kind of stuttering here. We see that the 1.618 puts us around 100,000, 2.618 puts us around 155, and that full extension puts us around 250K. I don't think that these are unreasonable numbers for Bitcoin to get to over a cycle. Now, when you look at HBAR, right, and of course, we are up all the way up here with Bitcoin. So from a structural standpoint, much further back, we are retesting accumulation here on HBAR. I personally think it looks absolutely fantastic. But when we look and we go ahead and grab the same fibs and we go from the 21 high here, we go to the low here, you can see, first of all, how much further back we are in the cycle. So we look at Bitcoin from current market up to that first target, you're going to get about a 63% gain. We take it all the way, you get almost a 3x out of this, about a 280% gain. You look at HBAR, where HBAR is at currently, and we look at this even up to a 618 retrace, so 61.8% of the previous all-time high. We're getting roughly a 380% gain out of HBAR here. So I want us to remember that we shouldn't be blinded by price itself. I couldn't care less about what the actual price it is, right? Being a fraction of a penny, being 2 pennies, being $5, being $10, how much money needs to pour in, and what is the actual gain from current market up to some of those targets. So when we look at HBAR, not even making a new all-time high, you buy all your HBAR now at 7.7 cents, you sell it all at 37 cents. You will make almost another full X more than Bitcoin at $240,000, right? So again, I just want you guys to remember, don't be blinded by this. If you were to look again at HBAR reaching just its first target that we have here, that's over a 10x opportunity here on HBAR. So you're looking at roughly maybe a 2 to 3x here on Bitcoin up into the mid 200s, and HBAR being still below $1 for over a 10x gain. So I'm always looking at risk to reward ratio. That's really why I'm involved in the altcoin market. A lot of people will kind of fall into the Bitcoin maxi mentality because they think, oh, there's less volatility. But guess what, guys? Bear market is the bear market. If the difference between you making your money 6 months earlier and 6 months later, and you're willing to take a 20 or 30x haircut on the total gains you can make to get that gain 6 to 8 months earlier, go for it. But for me personally, I'd much rather be diversified in assets that I know, even from worst case scenario, could potentially outpace Bitcoin at astronomical new all-time highs.
Matty, we had a lot of good topics this show. I think we covered a lot. I think we answered a lot of good questions here. You went off on some great tangents there. Appreciate those tangents. A lot of good topics, a lot of good questions today, team. I told you on After Hours, bring good questions, and you guys did, so I appreciate that. Matty, anything to leave the team with here?
I know this, recent downturn has probably taken an emotional toll on a lot of you guys, and that's normal. It's okay to sit with that emotion a little bit. It's okay to be frustrated. It's okay to be disappointed, but don't make decisions based on you feeling frustrated and disappointed. I'm going to call back on this, and I know 99% of you guys don't take my advice on this because you think it's just maybe some sort of, woo-woo practice. Get a freaking journal, guys. It doesn't have to be complicated. It could be a digital journal. It could be a composition notebook. Logging your emotions, logging your thoughts, logging any trades you have makes you so much more consistent. Getting those just feelings and thoughts onto a piece of paper makes an enormous transfer. I know that maybe it sounds a little crazy, but this is, well beyond just trading. When you take everything that's going on in your head first thing in the morning, right? Like let's say you wake up in the morning and you're one of those people that gets a little bit overwhelmed. If you just write down all the things you have to do, that immediately decreases cortisol levels exponentially. This is scientifically studied stuff. So if you guys feel overwhelmed, if you feel stressed with your trading, first of all, make sure you guys are in cryptocharge.com in the Discord. That's a great place to be. But secondly, make sure you have a trading journal because it's a great place to decompress, log your thoughts. And it's a good thing to look back on too, because when we are in these big bullish periods, you're going to look back on an entry from a place like today, and you're going to be like, wow, I can't believe I felt like giving up. I can't believe I felt so depressed. I can't believe I felt so defeated when you're looking at your assets being up 5, 6, 7x in the future, right? So highly recommend you guys getting a journal. It's one of the things that's really helped me over the years. Just be better with my trading, be better with my investing.
Dr. Matty bringing it, giving you the cure to your illness. Good job, Matty. I like that. What's the cure? Crypto charge. Buy my program.
Buy my program. Buy my course.
All right, Matt. A lot of good topics today. A lot of things we hit. Well, team, I think this was a great week. Obviously, we've seen some correction here in the altcoin market. We talked, extensively on the After Hours show that this is your time to be buying. And so do not miss this opportunity for this life-changing opportunity to invest in a very new asset class that you can make some serious money in. And don't go in like a gambler, go in like an investor. Take that investor mentality, learn as much as you can. Look at the charts. I know it might be a little bit tough for you, but just learn a little bit. I mean, we have that, the 45-minute beginner's course on the website. That will just get you an inch closer to your goal. So, team, take advantage of that. Don't miss out. And I think that's all we'll leave here today. We will see you guys next week. Bye.